Welcome to Markets Now. I'm Michelle Roque with Arlan Suderman of StoneX. We saw mostly higher livestock futures on the close on Friday. The grains were mixed after the WASDE. And Arlan, let's talk first of all a little bit about the corn market, a little higher close. That was the bullish surprise here in the report. Everybody thought ending stocks were going to go up, and they actually went down like 200 million bushels under trade expectations on new crop, right?
When you look at the stocks report on June 28th, it suggests that USDA needed to either increase the size of the crop or cut feed usage to make the math work. They did neither. They didn't increase the size of last year's crop, but you wouldn't expect that before September because they don't really like to change the size of the previous year's crop. So they do it in September when we're focused on the next year's crop. So if they're not going to do that, if they're going to make the numbers work, then you have to cut feed usage. Now, you can still argue that feed usage is good because the economics has supported feeding these cattle to heavier weights, record carcass weights coming out, even feeding hogs a little bit longer to put a little more weight on them. So we've been feeding a lot of corn. Cheap prices do create demand, and we've done that. We've done that with ethanol production as well. So how do you make the math work in the meantime? USDA essentially punted on that. Looked like they wanted to get a new crop ending stocks number below 2.1 billion, 1 billion bushels. To do that, they increased feed usage for both marketing years by 75 million bushels. They increased exports by 75 million bushels. Some increase in exports was justified, maybe 25 million. Right now, if you look at marketing year-to-date shipments, we're about 41 million bushels shy of the pace needed to hit this new USDA target. And we have a lot of Argentine and Brazilian corn hitting the world market right now. So I think they were a little bit optimistic on that, but they got their ending stocks number below 2.1 billion.
So you do not think that this report necessarily changes the narrative here and keeps us above the $4 mark here on corn, or gets the funds out of those short positions you talked about?
I think it's really going to come down to weather. If the weather stays favorable, and I can hear the cries already and the shouts of those in the Northwestern Midwest, where yes, you do have some significant problems. I agree with that. Your problem is the corn looks so good elsewhere, and it's making up for the losses in your area. That's the problem, and that's too bad. That's unfortunate for you. And as long as we don't have a legitimate threat to the rest of the crop, I think the funds are very comfortable holding their short positions that they have. They're making money with that. But if we do see that change in weather and the crop ratings start to take a sharp turn to the south, so to speak, at that point, then I think they would start covering those positions.
We didn't see a lot of change in the soybean balance sheet and the WASDE report, but I guess my question is, do you think demand can really hold up here, especially with the export pace that we've seen, which has been behind normal?
Yeah, I've been the one who's saying that USDA was too high on their export target, and I was 150 million bushels below them a year ago for this current marketing year. I think 150 million bushels, and that's exactly what USDA has come down in that time period. But I think they've overshot it a little bit. I think exports are a little better than what they're saying. And when you look at crush, I think they're a little on the low side. So my old crop stocks are a little bit lower than USDA. That means I have a little lower new crop beginning stocks on September 1 as well. When you come to the new year, again, I have a little higher crush target than what does USDA, but my export target is nearly 100 million bushels less. Once again, when you look at Chinese buying or any customer buying at this point, normally we would have 400 million bushels of new crop on the books by now. We barely have 50 million bushels on the books, and we're struggling to get that. New crop demand simply isn't there. China is going to take in about 6.5 million metric tons of soybeans over the next 3 months above year-ago levels. In a year ago, they had very aggressive imports during the summer, so they could reduce what they needed to import during those months in which they typically lean on us. And I fear the same thing is happening again this year. So my ending stocks number is a little higher than USDA, and I think we're more at risk of that ending stocks number going higher in the months ahead than we are lower. And so if we get a weather scare, we need to be taking advantage of it with our pricing.
Yeah, and obviously the trade kind of is in your camp because we ended a little bit lower here today. And do you see a lot more downside risk to this market if we don't get some sort of weather issue?
Well, ordinarily, I would say no, but we live in a new environment of trading today. And a good example is that was a few years ago when crude oil traded negative. We said that could never happen. It traded negative. And it's because momentum trading algos will take it in a certain direction, be it down or up, until something makes them turn direction. And so if they want to keep taking it lower, they can until they hit their position limits. The good news is that we're already looking at record to near record short positions in these markets. So that may limit the amount of selling they do. But when the farmer comes to sell his crop, and that's on both sides of the equator here and in Brazil, that means that the funds will be there to offset that selling. It doesn't necessarily mean you get a big rally out of it.
Yeah. Sharply lower day in the wheat market, obviously in reaction to these higher production numbers. Were you surprised by those numbers, and do you think they keep going up from here?
Yeah, I think everyone is surprised. We all expected an increase in the size of the crop, but not as big as what USDA did. And so now the market needs to find a way we can clear these prices. We can clear it by increasing feed usage, and the market's trying to do that. But that means less corn feed usage then if we do that. And USDA just bumped its corn usage, feed usage estimate by 150 million between the two marketing years. So that creates a problem. Overall, it comes down to Black Sea. Russia right now is driving prices lower, trying to get through the gut slot of harvest when they need to move wheat out because it's all coming in. Will they restrict exports longer term? There's rumors that they may do that. We really don't know if they will do that. If they do, it does open up some opportunities to see our export number increase. If they say, no, we've got enough leftover old crop stock so we can continue to pump wheat out the door at a fast pace all through the marketing year, then we're going to struggle to hit USDA's export target, and prices here are going to struggle as well.
Yeah. And do you think the funds keep pushing the short side of the market because of what you just talked about momentum?
From a fundamental standpoint, yeah, I think they have incentive to do that. Now, 6, 8 months ago, I was saying come the second quarter of this year, we're going to see them cover their short positions because they're going to be concerned about reinflation in the United States. They did that, but that reinflation story has died away here now over the last month. And the funds are back to a commodity deflation mode at this point, and they're very comfortable holding big short positions in the ag commodities. So we need to see that reinflation story start back up, in addition to having some good increases in demand and maybe some threats to supply.
Yeah. So the funds are still long in the cattle market. That's one exception. And obviously, the cash market a little softer in the South this week. Boxes rolling over a little bit. Do you think what we're seeing here this week was just kind of an intermediate correction in an otherwise bigger bull market or not?
Well, seasonally, we tend to see the high behind us. And so we held on to the product market about 2, 3 weeks longer than what we would have anticipated. That has started breaking now. Does that mean that's the beginning of our seasonal trend lower? That'll be something we'll be watching over the coming week or two to see if they continue to break lower. One exception to that is hamburger prices, because we're reducing dairy and beef cow um, slaughter by about 22 and 24% respectively. I may have those two numbers turned around, but either way, from a year ago level. So we're slaughtering a lot fewer cows, and that's tightening up the supply of hamburger. Outside of that, though, product prices have started to work their way lower. And so we're going to have to see the consumer really come through to sustain that demand right now, as we've seen carcass weight start to come down, but they're still at record levels for this time of year. And a lot of that goes back to those feeding economics I mentioned earlier. But overall, there's some indications that maybe the near-term high is behind us until we start tightening up the supply again, as we start holding back heifers to rebuild the breeding herd.
So true. And we'll just end with the hogs here. We saw kind of the forward spreads working here again today. So the front end of the board supported, despite the fact that we have pretty big upfront supplies. We did score new contract lows this week in that market. What's it going to take to build on this up day?
Yeah, I think there's a lot of concerns about soft demand. I'm not so sure the demand is so soft. I think it's more the supply problem right now, and particularly when we're taking those carcass weights heavier. We've had good growth in litters, pigs per litter, and then we've been putting a lot of weight on these hogs as well. And that combination of supply, I think, has been where the problem has been overall. We need to be restrained in further expansion as we try to bring supply and demand into balance. We've seen that big liquidation. Now we've seen a bounce. Have we been able to put the bottom in here? That's going to be the key. There's still some concerns as we get into the fourth quarter about oversupply relative to slaughter capacity. We're going to have to watch that as well.
Thanks so much for joining us, Arlan Suderman with StoneX. That is Markets Now.